All right, welcome back to the Good Dudes Real Estate Podcast. My name is Cameron Cassidy. This is my partner in crime, Saman Habibi.
Hello.
We are episode 6, heading into chats about real estate. We are going to give our personal updates, what's going on in the market, as well as a couple hot topics at the end. If this is your first time viewing the episode, please like and subscribe. Introduce yourself via comment below. And let's get right into it.
Yeah, let's do it. So for anyone jumping in new to our channel, why don't we do a quick update as to what you're doing right now from a business perspective on the realtor side, and what about on the personal investing side?
Yeah, so it's been pretty active. I had a new listing go up today, just a single family home in Bowmanville, 3-bedroom home. So I've been working on that and getting that ready, and closed on another flip property technically 2 days ago.
2 days ago.
Yeah.
Cool. So you have a flip project that you close on, and you're working on a duplex conversion as well.
Yep. Duplex conversion. We're waiting on permits, and also renovating a primary residence that we're moving into. So
you'll be 3 properties on the go.
3 properties on the go right now. We're renovating, and as we head into our 3rd lockdown.
Oh yeah, 3rd lockdown's coming up. Yay. Cool. Yeah. For me, I've been working with a client on the investor side. So a client who actually reached out to me through my YouTube channel. So they found me on YouTube and they reached out to me. And, I went through our steps of qualifying them, making sure that they're qualified to purchase. And, we went out, we did 3 visits with them. We found them a property. We purchased this past weekend. So that was a great win for my client.
Huge congrats. Yeah.
Yeah, that was awesome. Like, we were competing, we paid a premium for the property, but I'm hoping to do a full video on that, and why we decided to pay a premium on it. Yeah. So for anyone wondering, maybe I'll do a sneak peek. So they purchased an investment property in Oshawa in the McLaughlin neighborhood, which, considered a type neighborhood, on a 60 by 130 foot lot. They paid a whopping $825 for an investment property. Yeah.
Oh, baby.
So we'll get into it at maybe another episode, and jump into the numbers. On the investing side, the flip project is coming along fairly well. I think we'll be done in 2 weeks or so, and then on the market to sell.
So are you concerned with this lockdown starting and that affecting the flip at all? I guess
don't
at
think
3 o'clock
no.
today they're making announcements.
Yeah, I guess they're making an announcement. Yeah, we're speculating that there's going to be a lockdown, but I don't know if I'm concerned, because it seems like every time that there's been a lockdown, there's more people at home looking at homes and getting out and back on the market. I don't know.
It's true. The market's just exploded every time there's been a lockdown.
Yeah.
So maybe this is a good thing for real estate if you're on the sell side anyway. But
so not overly concerned. No. And then on the duplex conversion side, I got 2 duplex conversions on the go. One, I was just speaking with my partner, found out that we're getting our stamp on our permits. So we'll be, hitting the floor on Monday.
Good.
Starting with HVAC. We got to do some HVAC work in there.
Is that Central Park?
That's Central Park.
Good.
Yeah. Central Park will be up and running. The upper unit at Central Park is done, so we just got to do the basement. I'm hoping that takes 4 weeks and we're done, which would be awesome.
Yeah, we did our kitchen install in our upper pre-permits.
Yeah.
Which we were a little bit nervous about, but just said forget it. We're going to do it anyway, and put it in. So there was no change. It was the same layout, and the flooring's done in there too. So. Trying to chip away at what we can, but that's good to hear you're getting permits. I think we're about a week behind you, so.
Yeah, and then on Floral, which is duplex conversion number 2, we submitted permits on February 11th, and we're still waiting. And I've been calling.
What was Central Park? Do you remember when you submitted on that one?
Central Park was a revision, which we submitted maybe 3rd week of February, so like a week after that. But this was a revision versus a full new drawing, right? So
quicker, yeah. Okay.
Yeah. So that's that on the on our personal side and on the professional side. Should we get into some topics? I guess one of the topics that I had here was a quick update on how long it's taking to get permits. And I think we can say that in Oshawa, We've both had open permits now for, I think we're going on to 7 weeks. 7 weeks, 6 or 7 weeks now.
Yeah, I was about middle of February, so I'm about a month and a half.
Yeah, and I was February 11th. So I
think we were around 15th, 16th, somewhere in there.
So right now it's at minimum a 7-week period to get your permits. I've spoke to the city on 2 separate occasions, and they're still working from home. And what I'm hearing is that they're absolutely overwhelmed right now. There's shortage of staff, so on and so forth. They've issued a notice on their website saying that everything's backed up. Now, the mandate on the City of Oshawa application is that conversion or applications take 10 business days to get approved, which is 2 weeks. Yeah. So now we're at 7 weeks.
Yeah, I felt like it was like 7-8 weeks when things were normal.
Yeah. Yeah.
So I don't know, even 8 to 10 weeks. That's to be expected. I'm happy to hear that you got yours, and we submitted our for our flip property. We're going to finish the basement and add a new bathroom in the basement. Yeah. So we decided to submit permits and that. So we'll see how Ajax is.
And that's with the city of Ajax. So we'll see how they move.
I'm hoping they're a little bit quicker, and it's not a legal 2-unit conversion. So it's just finishing a basement, and really upstairs we're not touching anything. Yeah. So I'm hoping, there's no issues, but we'll see, I guess.
I'm smiling because you closed on Ajax, and Ajax was an absolute storm for you on the closing side with lawyers. So why don't you get into it now that you've closed?
I'm wondering right now if we talked about it in episode 1.
Probably.
Or how long ago, but we've had to push it back a number of times. The tricky situation is that one of the sellers, we were selling the home without their permission, essentially.
They were selling the home to you without one of the owner's permission.
Yeah, one of the owners was non-responsive and wouldn't respond, wouldn't sign off on anything. So they had to go to a judge who had to rule on it and essentially say, okay, let's give this person X number of chances. So they kept having to extend, and I'm trying to be patient, saying no problem, I'll extend it. And then it was like getting to a point where it was like, okay, this is a little bit ridiculous. Like we're, 2-3 months past when you said we'd be done. Like I think our original agreement of purchase and sale was dated for just January, like January 2nd, 3rd, 4th, and then like mid-January. Yeah. And we just closed April 1st, March, end of March kind of thing. But I later found out that the lawyer, saw our agreement of purchase and sale and essentially tried to backdoor me. So went directly to the seller and said, hey, I have a buyer that will pay more than this offer, right? In my mind, we have a firm offer, right? But I guess because we didn't have approval yet for this other person to be, the judge, I guess, hadn't ruled, which the lawyer told me, no, it's good, you're fine, the house is yours, it's all good. But then backdoored the sales rep, the realtor that was working for the seller, because they were like, no, we're happy with the deal. Didn't believe that person, went directly to the seller to try to get their own personal investor to buy the property and cut me out of the deal. So,
what a sleazeball.
Yeah, and I was just like, I was just biting my tongue to get it closed, and that's why last week I alluded a bit to it. Didn't want to jinx it, but I have the deed and everything's officially closed. So, obviously not going to mention names or anything like that, but it was still a little bit shocking. We'd kind of made this arrangement in December. When you're flipping a property, you're taking risk, right? Like the market's come up since December when we agreed, so it's looking good for me. But then we've talked about all the inventory coming on, and with flipping, it's always a gamble.
Exactly. So you submitted a firm offer on a property that required approval from one of the owners to sell. During the phase that the deal was sitting with the lawyer saw the agreement and realized that, they can perhaps find a buyer at a premium and maybe get paid on that side as well. Yep. So they were trying to, cut you out of, and this lawyer was acting for the seller, right?
Correct.
They were acting for the seller.
Which you could say like they're looking out for the seller's best interest, yada, yada, yada. So, I had to be careful, right? And sit there and say, but again, I purchased the house not sight unseen, but went through a quick walkthrough and said, what's your number? Gave it to them. I actually went in lower. They said, we want this number. I said, no problem. Didn't negotiate. Said, take your full price. No problem. No inspections. I'm allowing the seller to stay in the home for a month after closing. So that's why like we're submitting permits, but we can't start renoing until the 19th. So about 2.5, 3 weeks. So, being very accommodating, right? To say, look, whatever you're looking for. So they respected that and appreciated that. And, honored our agreement instead of trying to say, hey, let's try to go for a little bit more money. And even the amount of money the lawyer was presenting wasn't much more. And then they wanted the seller to pay rent, and it was just like, it wasn't even a good deal. It wasn't like it was $100,000 more or anything like that. Right. So
how are you managing, the homeowner staying at the house? Are you doing a holdback? Are you treating them as a tenant? Are you?
Yeah, no. So we did a $50,000 holdback. So that $50,000 will be released once they leave. I think we have April 15th is the date that we agreed on. I didn't want to sign a lease because then you get into, them being a tenant, right? Which they're not. They're the homeowner, staying, in the home for an extra couple of weeks until they can get suitable, a suitable home or rental, or I'm not quite sure exactly what their plan is, but I know they wanted the money out first before they moved on anything. So,
similar thing happened on the flip that we purchased. So we did a holdback of $40,000 until they vacated the premises, and there's also a daily penalty if they stayed additional days. So every day was $500 that they would lose out from the purchase price. So it's kind of nice because it covers you in that, hey, if you take longer, sure, take longer, but every day's $500 for you.
Yeah, and that's probably something I should have put in there. I don't really have any sort of penalty or what ifs. Again, I'm not too worried about it. They're going to want their $50,000, obviously, right? So it's not a small amount of money. But there is some protection in there. But ultimately,
it's funny that you've had a lawyer experience because I've had that too on my first duplex conversion on Oxford. So I needed an extension on the closing, and I reached out to the agent and I said, hey, look, I need an extension. He's like, sure, I'll let the lawyers know. And the lawyer came back and said, tell him to call me. I'll give him a mortgage, and he better get a mortgage from me or else we're going to sue.
Oh, man.
And I was like, so the lawyer
That's extortion.
So the lawyer wants me to go and get a private mortgage from him at a ridiculous interest rate, or else he's going to sue me.
Yeah.
And, sure enough, I called his bluff and I said no. And I found actually that the best practice there was to get into a negotiation tactic with the lawyer, like me directly with the lawyer or with the listing agent. It was actually to let the lawyers just talk it out.
Yeah.
And it was very, because the initial answer I got to an extension was absolutely not.
Yeah.
And I let my lawyer know. He's like, and they said, let us have, written facts back and forth. They're faxing back and forth.
Oh, man.
And sure enough, as soon as the lawyers reached out, it's like there's nothing about, no, we won't do it. It was like, sure, give an additional, $10,000 deposit and you can do it.
Yeah. And similar, like even when things like I remember the lawyer called me directly on the Wednesday. We were supposed to close the Monday, and I was like, I'm not talking to him, right? Mm-hmm. Like I was just worried about what I was going to say or be angry or, I didn't know what was going to happen, right? So I decided not to do it. But I forgot to mention the one part too. So we were supposed to close the Monday, but it was so then we originally had an April 1st closing, but they get this approval. Then they want to move up the closing, right? So I'm like, okay, I'll move it up, but I got to call insurance. I got to get my lender's lawyer, all the information. And so the insurance was taking a little bit longer, and we didn't have it on the Monday. So we had to bump it to the Tuesday to close, right? Mm-hmm. And sure enough, this lawyer goes and emails. My lawyer tells me that he said this, that, oh, well, we're going to start charging interest.
On the delayed close? On
the delayed 1-day closing after I'd waited 4 months, and he tried to backdoor me. And I was like, are you kidding me? That, you got to be... and I've really been tempted to send a strongly worded email to him and just, you know, I know we joked a little bit about it, saying, hey, you know, do you want a JV on this or something? But no, I will just take the high road.
Yeah, exactly. I think it's the best thing to do. And funny enough, taking the high road, we've had another issue with a lawyer on the land assembly deal that we were trying to put together in Whitby.
Oh yeah, we forgot about that. That's a good one.
So we found a property. We found two properties side by side. You know, made up a good square footage. One of the properties was being leased by a lawyer, and the lawyer was acting on behalf of the landlord. So we approached the lawyer on the property saying, hey, we want to speak to the owner. And he goes, I'm the representative. And we said, sure. We gave him the offer on both the properties. He rejected our offer, and then he went and he purchased the property.
Looked at our offer, took all our info, and then just went. It's like, oh man, these, you know, I think we might get some negative comments from lawyers in these comments, but hey, I mean, these are all true stories.
Hey, truth be told, like you're finding errors on lawyers' paperwork.
Oh, it's been ridiculous, and I know they're doing a lot of transactions in that too. But I'm going to be looking for a new lawyer, to be honest. You know, there's too many errors on the adjustments and you know, miscalculations, and it's like if I'm not looking over it, I'm starting to think now, even from my clients and stuff too, going like, hey, you know, because they're not like I know exactly what I'm paying for and what everything should cost and, you know, where things should go. But it's you know, like anything, you can't just blindly you know, trust someone. You have to have some checks and balances in there, and you know, proof work and things like that. So but
cool. All right, let's get into the next topic. So the next topic I wanted to talk about was taking risks when it comes to buying real estate. And the story that I'm going to bring up has to do with an off-market deal that we did. So I'll give you a background on the story. So there was a property for sale in Oshawa by the lake, 1162 Nelson. And, you know, beautiful property. We sent it to our investor buyer list. I posted it on social media, found a buyer for it on social media, actually 2 buyers on social media. And I kind of said that I was going to do a first come, first serve, you know, just to be fair. And the first person that came in, they are actually, they are an investor in the Oshawa area, well known, quite active. They do a bunch of deals on the realtor side and a bunch on the investing side. Anyways, they wanted to go into the offer. They did present an offer. The offer was on the lower side of the asking price. They wanted to have it conditional on seeing the property. They wanted to have it conditional on getting an N11 signed. And that was it. So whatever, we submitted that offer, and the sellers came back saying, you know, 1, you need to increase the price. 2, you need to get rid of the conditions. We don't want to deal with the conditions. So sure, went back to them, and, you know, sure enough, back and forth, and no. And let's just keep in mind that the increased price that we were talking about was still below fair market value, like maybe like $70,000 below fair market value. But I guess the buyer is just, you know, seeing what we initially had offered, and now seeing that they had to increase it. I believe they were looking at, now we've increased our offer rather than we're still buying it below market value. So deal 1 didn't work. Deal 2 was a realtor that reached out to me in our network and said, I'll buy it. I said, great. I sent him the information. I had a 2-page PDF document, sent it to him. And he looked at it. He said, give me 30 minutes. Came back in 30 minutes. He said, we'll do X amount, 45-day closing, sight unseen. We won't even look at the property. We'll assume the tenants, deal with them on our own. And I was like, this is a done deal.
Yeah.
And sure enough, we presented that. And because the offer was so clean, there was no risk to the seller, but a lot of risk to the buyer. They decided to go ahead with it, and they accepted the offer. So what I wanted to talk about was taking risk, right? So 2 of the people that offered on this property, they were both realtors and they're both investor focused. Okay. So one of them, doesn't want to assume any risk, but on the other hand wants to assume a lot of risk. So, it goes back to the topic of high risk, high reward. And I want to talk about some of the conversations we had with the second buyer, which made them comfortable on assuming risk. So, a couple of the risks that I identified was, purchase price risk, risk of the property being in shambles, and risk of not being able to get your tenants out. In my opinion, I did have a conversation with the person after we purchased, not even before, after we purchased, to get them comfortable on the risks that I identified. And I think on the price side, it was fairly easy to show them that what they were purchasing was way below market. So that was good. The second risk was sight unseen, right? So you haven't seen the property, you're buying a property that could potentially have a lot of issues. And we were told that there's a leak in the basement, and we kind of disclosed that to the buyers from the get-go. But the way we kind of got comfortable around the risk of sight unseen problems was that, one, you have to assume that you're buying a property that's going to need renovation. So right away, we're budgeting, $70,000 to $80,000 of renovation for the basement. Okay, that should essentially take care of most of the problems identified. Now, in terms of additional problems, the way I approached it was, there's 3 bedrooms upstairs, a kitchen, a bathroom, right? So we have 5 rooms in total, and the basement's open. So what I said was, out of those 5 rooms, the max that any problem should be discovered for each room shouldn't exceed $4,000 or $5,000. Now, what is the problem? The likelihood that each room is going to have a problem, probably very low. You might have some problems in the kitchen with sinks and whatnot. So I said, look, any problem that comes up in a room is not going to exceed, $4,000 or $5,000. So it's not going to be a material expense of things that we haven't seen. And let's be honest, there's people living in there right now. So if it was that bad, this would have come up and they would have disclosed it to us, or we would have asked the seller and they would have had to say something. So that's how we got over the sight unseen risk. And then the other risk was the tenants. So, there's tenants in the property, and we said that
which was the bigger risk, in my opinion.
Which was the bigger risk, yeah. So we said that we'll assume the tenants, we'll talk to them on our own, and we'll give them cash for keys.
Well, we'd already had some inkling of, from a previous deal that had fallen through as well, that the tenants were willing to cooperate.
Yeah.
So
yeah,
that helped, knowing that, they weren't going to, give a firm no. But there's still risk there of them asking for more money, deciding not to leave, not finding a suitable new rental spot.
Yeah. So, and then, what we did after acceptance was go and see the property and talk to the tenants. And sure enough, we spoke to the tenants. Tenants seemed level-headed. We were very honest. We said we were going to come in and we were going to move in and start renovating the property. And right away, we brought up the cash for keys, which is, the concept that we're going to give you cash in exchange for vacant possession of the property. And there's never a hard no. It was cool. Now that we know there's going to be some cash coming in, we'll start looking for a place. So, luckily it worked out, and there was a bit of a trust factor on the buyer side, right? So I had told the buyers that, look, based on a previous conversation and a previous deal that we've tried to put through, we know that the tenants are willing to vacate the premises. So I had given him my assurance that I'm comfortable that these guys will leave. Technically they could just reject that deal and stay, but I had to give my word and kind of feel out the situation and know that if it's possible or not. And you and I had a conversation, and I was trying to figure out, what kind of conversation did your previous buyers have? And it was, like you said, they had spoke to them, they had come up with an amount, and the tenants never said no. So that was a good sign.
Yeah, I mean, and this is the risk reward thing is nothing new to investors, right? This is why investors make money. This is how they buy properties under market value. They take on risk, right? Just earlier, me talking about my Ajax property, I took on risk by not doing a home inspection, but I did the same thing. I said, okay, well, what is the worst problem that could be here? Let me price that in and, make my offer based off of a worst case scenario, right? Again, not getting a financing inspection or not a financing clause, right? I'm now using private funds paying, 8% on that property. But again, priced in saying, look, here's kind of worst case scenario, and was able to still get financing, right? So you can always sit there and come up with like, here's the issue and then here's how to resolve it. Once you have all those options checked off, you say, okay, let's take this risk and see if it pays off.
So does it come down to dollar amounts at the end of the day?
Of course. Yeah. Everything's a dollar amount, right? So if you price everything in and you still say, okay, I would still make money on this deal, you do it. Right. But for some reason, some people can't understand that concept. They think, well, what if, and it comes down to education, I think, a bit too, right? Knowing, what tenants are going to take to leave, how much things are going to cost to fix, you can get financing at, some type of percentage, right? So, I mean, to me, it's always just about, the more sophisticated investor means that they're more educated and more willing to take on risk because they know there is a solution to the problem.
Yeah, and the solutions often unlock a bigger potential of profit, a bigger profit factor.
I've had this conversation with a lot of non-investors, but single-family buyers about a home inspection. And even talking to my home inspector, I said during one of the inspections, I was like, what is the most amount of money that you're going to need with the inspections that you're doing, right? Some of the obvious ones are foundation problems, structural issues, asbestos in the attic, vermiculite, those types of things. But even when we were talking, he was like, I think at most around $30,000. I was like, okay, cool. I'm good with that number. Even if I thought it was like, that's worst case scenario. So if I have a buyer putting in a firm offer, which is common right now in residential real estate, I say, look, if you can price in that $30K and you understand that that's kind of worst case scenario, and that firm offer is getting you that property $30K under what it would be with an inspection, it makes sense, or it's worth it.
Yeah, I agree. I think you're right. It comes down to the education factor, not being educated, not asking these questions. And naturally, I mean, I guess, you wouldn't know to ask these questions if you're not around it all the time. We see inspections happen. My biggest, what I don't understand is people who want to do a full-blown inspection on a house that is, newly renovated upstairs with a finished basement.
Yeah.
I tell them, I'm like, I can tell you exactly what the inspector's going to say.
Yeah.
The first thing he's going to say is, I can't comment on any areas of the house that are finished. I can't see behind the walls, yada, yada, yada.
Yeah.
I was like, great. Finished basement, you want to do an inspection? I'll tell you what he's going to tell you. I'll tell you what he's going to say about the furnace, about the roof.
Yeah. Even on Madison, there was a crack in the foundation. And I obviously saw it, and I was like, okay, I know in my mind $1,500, $2,000 to get that filled. I'm going to waterproof it anyway because I'm putting a basement down there. So I'm like, I'm already going to address that. But it's a poured concrete foundation. I'm like, okay, no problem. That's the one where I was trying to get better financing on. I was trying to get like a B lender financing, and the appraiser came into the property, took a picture of it, and the lenders then had an issue with it. And they wanted me to get a home inspection. And I'm like, for what? Like, how is that going to help anything? I know there's a crack there. It's going to cost, call it $2,000 to have this repaired. Yeah. And they couldn't fathom that. They were like, no, that's too big of an issue. They pulled the financing. I then had to go get, that was 2.79, I believe. Now I'm paying 8% because of that. It infuriated me because I'm like, literally it ended up costing us $1,500. The guy was like, yeah, this isn't bad at all. No problem. Gave us a warranty on it for $1,500. I remember telling my mortgage broker this, and he laughed. He was like, yeah, that's just crazy. And I'm like, but even them, I'm like, what do you want? What is the home inspector going to he's going to say there's a crack there. I know there's a crack there, right? It's, some of the thinking is just a little backwards, right? And I think that's the moral of this. And kind of circling back to the risk reward, understanding risk. And I'm sure I got a discount on that house because of that crack too, right? Like how much of a discount? The seller knew it was there. The listing sales rep knew it was there, and they were probably going like, yeah, this is one, going to be tough to get financing on, two, going to scare people away. Again, risk reward. I think I got a discount on the house because I was willing to take on that problem.
Did they disclose that to you?
They didn't need to. I could see it.
Okay.
They didn't need to. It was something visible, right? So I went down and it was clear as day there, right? Yeah. So, yeah.
I mean, I assume people watching are going to say this guy went from 2.75% to 8% interest. He's losing money on this.
Not at all. Not at all. My JV partner was upset. Yeah. He was like, what is this? And I'm like, don't worry. It's like, again, it's short-term financing. Yeah. Once we get it, legalized and done, we'll go back to some A financing and, hang on to it for the long term. And, it adjusts the numbers slightly. But is it a reason to walk away from the deal? No, it's just frustrating that, that's the way a lot of people, see that kind of thing, right? So
awesome. Cool. One more thing that I wanted to chat about today, and I know we've been talking about it a lot this week. It's around the concept of diversifying. And when we talk about diversification, people are typically talking about diversifying into different asset classes, right? So you have real estate, you might have some stocks, bonds in your portfolio, or some precious metals. But we were talking about diversifying in the real estate space. We were talking about, having a good amount of residentials, having a good amount of commercials. So why don't we talk about that a little bit? Because I know you've been focusing on the commercial side a little bit more, and you've been looking at a few deals. So what's your idea around the concept of diversifying your real estate holdings and the type of real estate that you hold?
Yeah, no.
And why are you thinking about it?
Yeah, well, the first thing I'll touch on, because we both do this, we both flip, and we both are looking at right now legal 2-unit buy and hold strategy, right? Right now, that's the two strategies that we're focused on. And there's always some debate as to which one you should do, and our answer is always both, right? One is active, one is passive. And for some reason, people have a tough time understanding that concept that you can do both, and they are different. They are totally different. I was messaging with a close friend who owns a property up north, and they're thinking of selling. And I was explaining this same concept. They're like, well, the market's hot right now, I should sell. And I'm like, well, wait a minute, is it a flip or a buy and hold? And they're like, well, why does that matter? I'm like, it tells me a lot. Like, what was your intention, right? When you purchase this property, buy and hold is a business, right? You own it. Your income source is rental income from a tenant, and it's not a stock market purchase. It's not a flip, which is active. That's why I even asked you at the beginning, like, are you concerned with the lockdown for your flip? I know you're not concerned with your two long-term holds, because that's not a concern, right? So that's kind of the first concept that I think people should understand, is that within real estate, there's active, passive, and then the question you asked was, okay, there's multiple types of passive buy and holds, right? So right now we're doing residential 2 units, no more. So the other ones we've talked highly about is, residential multifamily, meaning, 4 units plus. So a 6 unit, 8 unit, 20 unit, and looked at those strategies. And there's a lot of people doing the small apartment building. I'm really attracted to commercial, and, the biggest reason is one, it is a different business altogether. Like, I don't look at them as the same thing at all. Your customers are now business owners. The Commercial Tenancy Act is heavily favored to the landlord. Your tenants don't pay after 16 days. You can lock the door, right? You can raise rents whatever you want, but you also need that business to succeed. You're invested in that small business or medium-sized business. having success, being able to pay their rent. So yeah, I mean, for me, I like the commercial space as well, and I look at it like a diversification away from just residential. And we've talked about the biggest problem with residential, being the Residential Tenancy Act, right? That's the biggest risk in residential.
Mm-hmm. So if commercial space is so much is heavily favored towards the landlord or the owners, why are more people not investing in the commercial space? What's holding people back?
Well, first would be the barrier to enter, right? Mm-hmm. They're more expensive. You can't find like a 1 unit, 2 unit commercial property that's 1,000 square feet, 2,000 square feet. Mm-hmm. They're all multi-million-dollar properties. They're all expensive. And you're playing with the big boys, right? You're playing with the REITs. You're playing with the bigger landlords that like this space because of, the reasons that I mentioned of having such a favorable contract between, owner and end user, right? Mm-hmm. Being a small business or a residential person. And the numbers don't look as good, right? Residential right now, the numbers are better. Like if you were to look at cap rates, if you were to look at, return on investment, they are better in the residential space, but you take on more risk, right? And I don't think people are properly pricing in vacancy and credit loss in residential.
Right.
And banks do, right? People go, oh, why did the bank only take 50% of my income, in a single family home or a legal 2 units? Like, because they're pricing it in. They're not saying, look, you're going to have tenants that aren't going to pay. And we've all heard the horror stories in the residential side where people can't get people out for years and have thousands, tens of thousands of dollars of damage, right? And they're taking a bath on their quote unquote investment. That risk is just not there in commercial. It's just not there at all. Your risk in commercial is a pandemic like we're in, businesses that close or don't succeed. But again, I'm looking at the residential market and I still sit there and go, these people need businesses. They need food. They need groceries. They need convenience stores. They need these essential services. So, I think for me, it would be focusing on a retail plaza that has essential services in them. Businesses that, would stay open during a pandemic, right? And that's what I'm keeping an eye on during these lockdowns, is which businesses are being affected by this, and helping them analyze and learn and say, you know what, this plaza makes sense because of these types of businesses in there and the types of leases that they're on.
Right. Yeah, I mean, the other thing that I like about commercial leases is that oftentimes they're base lease plus TMI and plus. Like essentially, the tenant is picking up absolutely everything. Every single expenditure.
Yep.
So when you look at it from a expense to the landlord, the only expense you're really facing is your servicing cost.
And I teach this in the course, and it blows learners' minds away when I explain a triple net lease, right? Where the landlord or the tenant is paying base rent. They're paying TMI, which is taxes, maintenance, and insurance. And maintenance can include everything: snow removal, garbage removal, property management, property taxes, anything to maintain that building. The landlord's insurance, right? So tenant still gets their own content insurance, but they're paying the landlord's insurance. You don't have that in residential.
Right.
They're paying the taxes. They're paying the property taxes.
Directly.
Or indirectly, but in whatever way, they are still paying the landlord's property taxes as part of their rent, right? And again, you could say that it's priced into a residential, but not in the same way where it's like, look, no, you're paying, these are my property taxes. And even the insurance, like some of the wording in the clause or in the agreements are, you're paying like the insurance, and the insurance covers like, credit loss and vacant units. It's like, wait, you're paying for the landlord in case they have a vacant unit or credit loss, and to insure against that. It's a little bit perplexing, but then they're also paying their own utilities. So, when a landlord has a net lease, they are, it's called a carefree lease, right? For a reason. And it is
very favorable to the landlord.
Very favorable, right?
And the other thing I like about the commercial space is that, especially in the Durham region, is that they're calling for, in terms of immigration, right? They're calling for around 1 million people coming to the GTA in the next, I don't know, I think it's 5 years or so, 5 or 10 years. And out of the million, most are going to go to Toronto and Scarborough and that area, and the rest will kind of ripple out. So there's a need for more housing, and one of the best ways to get high density is to build some sort of apartment building. And typically these plazas or these commercial investments that you purchase come in a nice lot size, right? So if you think about your strip mall, you probably have a frontage of, 200-foot frontage maybe, and then you have a good depth as well. So it becomes a prime candidate for redevelopment opportunities.
Yeah, you're owning a good piece of land, right? And typically a pretty high traffic area, dense area that can allow for options as as you hang on to it. So
and we are seeing a lot of those developments come to the Durham region. I know we've been doing a lot of research on the Whitby market, and it's the ripple effect, right? Once Whitby kind of hits its peak, you're going to see more development happen in Oshawa. Right now, there's more development happening in Bowmanville and Newcastle. So there is a gap. There's Whitby, there's Bowmanville, Newcastle. Oshawa hasn't really hit that, that type of high development. And we know they're coming. So once they come, there's going to be other investors who are saying, okay, there's a play here. Let's start looking at properties.
Yep.
And the easiest way to pick up, not the easiest way, but the most beneficial way to kind of get into that space is to find, one large lot, one owner to deal with.
Mm-hmm.
Whereas we know we've tried to put land assembly deals together, and they're quite challenging.
Yep.
Yeah.
Mm-hmm.
Right on.
Yeah.
That's all I have.
Yeah, no, it's a good topic of discussion, and obviously gets me thinking all the time. And we're always analyzing different investment opportunities. I know we were looking at storage, storage investments the other day. Was that yesterday? The other day, and again, there's lots of investment plays out there, right? And you try not to get too scatterbrained where you're looking at every area, but I also think that's healthy, right? To keep an open mind and look at other opportunities, even if you're not pulling the trigger on them. I think we can both agree we're still going to focus on, residential flips and, legal 2 unit strategy, because it's still working and it's still a very, very, smart investment.
Mm-hmm.
But, I know eventually here, once I have, I'm going to have 4 or 5, and then I'm going to want to say, hey, let's, diversify, right?
Mm-hmm.
Which I think commercial is a great way to diversify your real estate portfolio before you start getting into other types of investments. You're still sticking to what you're still using your knowledge and your education, and even as we talked about earlier, the risk reward of understanding how you can make money in real estate.
And you can still leverage, right? With commercial, you're still leveraging.
Big time. That's and that's the last point I was gonna make. I had it on my mind when you're thinking, is that what I think the difference is, what I'm looking at is, residential's flying up, right? And, in commercial, you're using the income approach. So it's directly related to how much rent the tenant is paying. Doesn't matter about anything else, right? No one's going to buy, a $3 or $4 million property unless it can cover its debt service and cash flow, right? So there's a lot of black and white in there in that right now. And, you're just not seeing the same speculation like you are in legal 2 units, where we're seeing legal 2 units go for $900,000 and they don't cash flow. We're to me, that's when it's like, okay, it's time to, stop the strategy. It's time to stop, using that when that happens. But then again, I look at a $900,000 duplex, or even call it $1 million retail plaza. I'll take the retail plaza.
Awesome.
Good stuff.
Yeah.
Good episode.
Again, thanks for watching, everyone. If you liked what we had to talk about, please like, subscribe, and stay tuned for more videos.